Welcome to Investors Insights, episode 157. We want to thank you for all the comments and questions we've received. They help us bring you the information you want. With that said, we have a lot of insight to share with you today about the markets and the impacts of your investments. So, guys, let's jump right in.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy Team from Five Plan Partners.
Greg is in client meetings this morning, so it's just the three of us. First, happy earnings weeks.
Yes.
This is a big week. Yeah. First quarter earnings start this afternoon, really. Mm-hmm. Monday night with Alcoa reporting. They're always the first one to report earnings. And so last week, our markets took a step back based on the fact that expectations are so low with earnings. So, Trey, talk about that a little bit.
Yeah, sure. So, here's some fun statistics on earnings. I guess maybe a little use of the word fun, but it's good and bad. We said last week that the Fed's going to be quiet for a few months now, we hope, and so it's going to be, the market's going to be driven by fundamentals, which is good. We like a fundamentally driven market. The bad is the fundamentals aren't terribly good. So the expectations are for first quarter to come in at negative 7.9% earnings growth year over year. That's one of the worst quarters since the end of the recession. If you take out energy, it's still down negative 3.6%. So the argument that it's just energy, it seems to be spreading across the economy. And then only 3 of the 10 S&P sectors are expected to have positive results. Now, these are expectations; these are not reported. So we've got a really low bar to jump over, and so as earnings come out, maybe we're jumping over that bar, and we can maybe get some momentum because it's not necessarily about what happened, but what's going to happen that really prices the market. So we got some pretty low expectations though.
So easy to surprise, though.
Yeah.
So hopefully we have a few surprises. The market could easily go up and rally. So
right.
Hopefully we have surprises. Mm-hmm. Also, the Fed. I think the Fed is going to hold off until June. I think the April rate hike is off the board now.
Yeah, right.
I think that's the market. That's baked in the market. So that's good.
But they can't be quiet forever, right?
Yeah,
no, that's right.
Yeah, they'll keep talking. And so to that point, actually talk about the IMF meetings. That's big news. This week.
It is. I'd be glad to. Trey, Bobby, and I were talking about that this morning. The International Monetary Fund, or IMF, as you know it, they're having their spring meetings this week. And what we want you to watch is the key fact that should come out of that, particularly with the advanced economies, which are 20 in all, which really dominate the economy and they sort of dominate the meeting, is the fact that really since 2008, monetary policy alone has been really the only bullet in the gun that has been fired to get us out of the financial crisis we were in post-2008. And you can see we've had nice long recovery of that, not as large as it has been. Part of the reason for that is that fiscal policy, or the government spending component, really has been, we don't want to say non-existent, but not nearly where it has been in years past. A good example of that is in the United States. If you combine all governments, meaning local, state, and federal, all of those expenditures together now are 17.6% of our GDP.
For last fourth quarter.
For fourth quarter of 2015, correct. Thank you. That's the lowest. We looked at it as amazing. It's the lowest it's been in 66 years. So if you look at the advanced economies around the world, a lot of the central bankers, Janet Yellen including, are in essence saying, look, you're going to have to give us a little bit of help. We've pretty much fired all of our bullets in the gun that we can. We're going to have some fiscal government help. The problem we have right now is that each advanced economy has some unique problems with that.
Yeah.
The Eurozone has the Syrian refugee problem, and they're having a lot of expenditures on that. Ours in the United States is with an aging population, our transfer payments, those are on things like Social Security, Medicaid, for example, and other things, is at 15% of GDP now. That's up from like 11.4% last year. So there's a tension by the federal government, primarily, of not being able to spend quite as much on infrastructure. So to Trey's point, a lot of these are large companies that are part of the index. A lot of them have large government spending units. I mean, that supply the governments at each level. So if that government spending is that low, that is not helping us.
Right.
So look for that in the IMF this week. You're going to start seeing a lot of central bankers put more pressure on their governments to get out there and start spending on infrastructure and things that would help the multiplier.
Yeah. So again, it's all about earnings this week. Also, we got retail sales come out on Wednesday. Usually retail peaks out about this time of the year, so we'll be looking at that. And then on Friday, the manufacturing numbers come out. And really, manufacturing has been the big weakness lately. And so the numbers are actually starting to look a little better. And so we'll be watching that on Friday. So Thank you for watching. As always, keep the questions coming. Have a great week.